Generally speaking, 4 things keep dealership owners up at night. How can I make more money? How can I reduce my tax burden? Who will be my successor? How can I prevent fraud in my business? Today, we're focusing on the 4th item, preventing fraud in your dealership. How often does fraud happen in dealerships? Now that dealership market has recovered from the 2009 recession, you might think your dealership is safe from fraud. During the recession, employees might have had to take a pay cut because your dealership was having a hard time. In your employee's mind, this pay cut could have helped to justify their dishonesty as a means of supporting themselves or their families. However, fraud is just as likely to happen during the good times as the bad. Dealerships continue to make money. Increased sales and profits create more opportunities to hide fraudulent activities. In a market research project Bradyware recently published, at least 51% of dealerships had experienced fraud or had heard of a dealership that experienced fraud. The other 49% weren't sure if their dealership had been defrauded. No matter the size of the dealership, big or small, there's at least one salesperson not following training protocols, one person falsifying loan applications, parts walking out the door, or even an employee claiming to work hours they haven't really worked. Fraud takes place on a multitude of levels in a variety of different ways. Fraud happens on some level in every store. Who's committing fraud? 38% of fraud happens outside of the dealership in the form of vendor and wholesaler fraud. It's important to have policies and contracts with your vendors and to review those policies regularly. You need to know who's accessing your dealership records and whether you have policies in place to prevent kickbacks with your employees. To reduce the risk of fraud, you have to be aware of both the internal and external fraud risks and have a plan in place to reduce those risks. Dealership fraud is seen in the news often. Here are a few examples of dealership fraud in recent years. A cashier took $12,000 over a couple of years by skimming customer deposits and cash payments for services. By segregating those duties, you can reduce fraud. Always involve a second person in the cash receipts process. The second example is an office manager, a trusted employee who handled accounting, payroll, and banking functions with no oversight. He took over $1.4 million, $100,000 a year for over 14 years. He would transfer money to personal accounts and write checks to himself. This dealership could have prevented these activities by segregating his job duties or by rotating the responsibility. Even having the dealer open and review the monthly bank statement could have helped prevent this loss from occurring. A woman in Pennsylvania was found guilty of stealing over $10 million over a 10-year period. That's roughly $4,000 per day. She transferred money into her personal accounts, wrote checks to her son, and bought all sorts of different items with dealership money. In another case, a salesman sold used cars for cash, claiming they were his cars to sell. Still, other cases involved creating fake ROs, service tickets, and fraudulent warranty claims. Some people have used dealership money to pay their mortgage payments or even their own car loan payments. In one dealership, salespeople were taking customer down payments and then redoing the loan paperwork with forged signatures to exclude the down payment to cover up the theft. It was only caught when customers noticed their payments were different than what they agreed to and complained to the dealership. People are often very creative on how they cover up fraud and will do whatever it takes to prevent ever being caught. When a dealer uncovers fraud, they have to factor in the cost of lawsuits, attorneys, accountants, and forensics to be able to make an insurance claim. And even then, will 100% of the losses be covered by insurance? A lot of the cases Bradyware has seen don't make headlines in the news, so we know more incidents of fraud are happening than what are being reported in the media. Dealers don't want the negative publicity, or maybe they're embarrassed when a trusted employee, friend, or family member has stolen from them. They often choose to avoid the negative publicity. The bottom line is that fraud is costly. Legal costs, negative publicity, and recovery is rarely 100%. It's much less expensive to prevent fraud. Creating an anti-fraud environment starts from the top down. Management must set the rules, and deviations cannot be tolerated. You must encourage honesty among your employees. Train them in fraud awareness and make sure they will be comfortable blowing the whistle if they suspect something is happening. What controls can you put in place? A few simple ones are segregating job duties, ensuring proper cash handling procedures, putting in place treasury and authorization procedures, putting physical safeguards in place, and cross-train employees to rotate between jobs. Enforce mandatory vacations. People committing fraud don't like to take vacations for fear their activities will be discovered if they're not around to cover them up. A significant amount of fraud is caught by chance when people are out of the dealership for an extended amount of time. There are 4 common themes when fraud occurs. The owners weren't always present to make sure the procedures were followed. The owners were caught off guard. They didn't have internal control policies or didn't follow them, and the fraud was discovered by chance, not by existing controls. Here are 10 best practices that every dealership should follow. Number 1, segregate job duties and cross-train employees to rotate jobs. Number 2, mandatory bank reconciliations every month. Number 3, control the mail. Banks still send notices and statements in the mail. Dealers should always review bank statements and compare to checks. Number 4, make sure all signatures are present on checks. 5, perform an annual vendor audit. 6, review journal entries regularly. 7, employ a CPA to perform spot checks. Number 8, employ controls in the parts department. 9, encourage whistleblowers. And number 10, enforce mandatory vacations for all employees. So, what's the solution? Our Secure Automotive Financial Environment, or SAFE for short. Bradyware has developed a product that has allowed dealers to customize your internal control testing, outsourcing your internal audit. First off, we need to start with a dealership-wide discussion and assessment. We talk to owners and managers about their concerns. They might have a feeling that something is going on, and they think they need an audit. An audit allows us to be comfortable with the dealership's financial statements, but SAFE allows dealers to customize audits in different areas of their dealerships. It's designed to make dealers comfortable with their financial statements. SAFE is very malleable. You can customize it to test 20 transactions or 500 transactions. It's based on the needs and concerns of the individual dealership. Implementation is flexible. For example, we could come in once a year or do a different program every month. It's entirely customizable to your needs. We focus on the primary areas of banking and cash, payables and receivables, sales and inventory, accounting issues, and departmental reviews. If you'd like more information, contact Bradyware Dealership Advisors at 866-502-8555.